Closing Beat, everybody. Happy Monday. How you doing out there? I've been wanting to get started here. It's like 10 o'clock today. I was like, let's do it. Let's start the show early. Come on, we'll do an all-day show. You see the markets today? I'm assuming you've seen the markets today. That's why you're stopping by. Hey, this is a quick show that we do. We call it the Closing Beat, just to kind of reference the name Jazz. We call ourselves Jazz Wealth Managers. We're financial advisors here. We focus on education, and I love you guys. I really do. Our customers here, I got some of the coolest emails today. Not one person panicking. A lot of people thinking about maybe adding or, doing a little shopping in there. I understand that. But I got the coolest emails. See, we teach. I'm so big on that. Every Thursday there's a class to teach customers, and we do all kinds of different topics, but it really made it like true to me today that is the key, right? Teach people how it works so that they see opportunity rather than fear movement in the market, because today it'd be an easy one to freak out a little bit there. We're going to cover it all here today. We're also playing a game. It's called Guess the Dow. If you want to take a shot, guess where you think the Dow is going to close by the end of next week. If you are correct, closest without going over, we'll send you a $100 gift card. Good luck, by the way, because 1,000 points in a day, I don't think many people would have guessed that one. Also, our class this week, we're going to go back to Nest Egg. I'm going to cover some of the common mistakes that I see people making in there. If you don't know, Nest Egg is a financial planning software that we give to every one of our customers as if they are financial planners as well. And so I let them kind of get things set up. And then if you need help, of course, that's what I'm here for. But I see a lot of mistakes when I'm reviewing your accounts. I secretly go in there and review even though you don't know. So I want to cover some of the mistakes, things there. We're going to do that Thursday at 8 o'clock at night. We are also featuring a Jazz Artist of the Week. Feel free to give me your suggestions, who you think we should suggest. We're going to do a song a day from a Jazz Artist a Week, just to reference our name there. And this week, it's not necessarily jazz, but there's a lot of jazz influence in there. And of course, probably one of the best trumpet players out there at the moment. His name is Chris Bodie, and the song is sort of perfectly fit for today. The song You Are Not Alone, he did a rendition that Michael Jackson did. Really, really good song. He did it with a guitar player, beautiful guitar player, acoustic guitar player. And so it's Chris Bodie, You Are Not Alone. So if you're scared of the markets today, go take a listen to that song. Take a little breath, relax. And if you were one of those that wanted the markets to fall, like I think a lot of you here, then you are not alone, man. Go enjoy that song, sit back and chill with your favorite glass of wine or whatever you like there. Let's get started here. You got the Dow lower. That's not a typo. 1,050 points. We opened up 400 points down last night, Sunday. I happened to be here in the studio, saw it open up down 400 points, and I was like, ooh, that's kind of exciting. Very shortly after, we were down 900 points. I mean, there was no sign of buying at all there. Look, concerns are the coronavirus is peaked in terms of the number of new cases in China. I shared that data with you last week. However, Italy's got issues. South Korea's got issues now. It's a bigger deal over there. In North Korea, we don't even know what's going on there. So look, that was a big deal. Both Italy's markets, South Korean markets. I think South Korea lost 5% overnight, 3% in Italy. And believe it or not, China, which has fallen the least out of all of the markets out there, even us, China only lost 0.3% overnight. And that's just because the cases have peaked over there in general. But the old saying, the bulls take the stairs, the bears take the elevators, came true today, right? That's what the old saying is, by the way. Bull markets tend to gradually move their way higher. You very rarely have a runaway bull market that takes off. If it does, it doesn't last very long. But when the markets fall, it tends to happen fast and kind of like rip the Band-Aid off. Oh my gosh, what's going on out there? That's the case. We got down today on the SPY, which I use the S&P futures here to show you. But if you look at the SPY, we can do that. The SPY gaps down by over 2% on the day. That's the 13th largest gap down in the SPY's history. Now remember, it only goes back to 1993. 93 is when this ETF came out. It is the original ETF, period. Not only the original index ETF, but it is the original ETF. 99.2% of all days in the SPY traded better than this, right? So this is very, very rare. A big move down like this is actually quite rare. I mean, 0.8% of the time do you see something to that effect. At the lows of the day today, it was our lowest down day since February 5th, 2018, where we lost 4.18% all in one day. I don't have it up on the charts. I'm sorry for you. But we'll cover some other stats there later. Like I said, the Dow was down overnight, 400 points immediately, and then just kept going from there. It was just, I just kept checking all hours of the night. I was so excited. Just kept checking it there. It is now negative for the year, by the way. The Dow is down negative on the year by 2%. So after today's move, we are no longer positive in the Dow. We're no longer positive in the S&P as well, but it's basically flat. The S&P is down 0.2% at the moment. So year-to-date performance going into the negative there. And here's the key takeaway from this. You guys all wanted a pullback. I was with you. I'm right there with you. But now I want you to measure how you feel about it. See, everybody says markets pull back, and then when they pull back, people go, ooh, I don't know. What do I do? I'm kind of scared. Well, that's normal. It's totally normal to feel that way. But remember, when you ask for a pullback and you get it, that's the time to go shopping, get exciting, start paying attention. Not the time to be walking around, just do it, buying whatever you like. It's time to start paying attention there. But I really want you to focus on how you feel. Because on TV, even the local news is going to cover it longer than they probably cover the sports section, which is weird. They usually spend all their time on weather, sports, and who killed who. And then they spend like the closing break on the way out to commercial to say the Dow was down 1,000 points today. I bet you they cover that more. And because you see that, or you see CNBC going late tonight with no commercials to cover this market, you're going to be like, oh my gosh, maybe I should really panic. Grand scheme of things, what are we looking at? We're looking at a 5% pullback off of highs. It's not really that big of a deal in the grand scheme of things. All right. The Russell 2000 did outperform the S&P 500 today in terms of relative strength. It only fell 3%. Well, it fell a little less than 3%, but now it's down about 3% after hours here. So Russell 2000 was the outperformer. The Dow was the NASDAQ was the underperformer, falling all the way back to the 50-day moving average. Okay. Let's still be mindful of your time here. I could go on all day, but let's do this. In the Dow, Verizon sticks out as one of the better performers. It was actually positive most of the day today. So Verizon hanging in there. McDonald's finished down only 1.09%, and actually you see how it recovered off of its lows there. So that stands out as an over performer. And Walmart kind of faded away, but it was one of the better performers as well. There wasn't a lot more to find there. In terms of the weakness in the Dow, you got United Healthcare. Look, Bernie Sanders out there, he killed it in Nevada. Love him or hate him, he killed it in Nevada. He's sweeping all this stuff. These healthcare stocks are going, oh no. Shoot, what happens if he wins? Maybe he can't beat Trump, but maybe he does. Maybe he becomes the nominee. There's a little fear in the healthcare stocks. I don't care where you stand on politicians, but there's a little bit of fear here. So United Healthcare, one of the weaker ones in the space today in the Dow. Going outside the Dow, you've got Cigna, also down on the day, 7% or so. And then let's take it a step further. Was it Humana? Yeah, Humana down 6.3%. So the insurers really have some concern. That's more Bernie Sanders related, with the sort of icing on the cake of it being a pretty nasty down day. In the S&P 500, now down 0.2% on the year. Gilead Sciences stands out, up 4.5% on the day. These guys supposedly are the closest to having a drug that helps with this coronavirus thing, help prevent it, not cure it, but prevent it. And so the World Health Organization said, okay, out of everybody out there, we think we should focus on you guys. Let's get this done. Let's figure out what we got to do to make this happen. So that one stands out there. Newmont also going to be in the mix, the gold mining stock. This one showed its relative strength ahead of time. We've been pointing this out like every single day, that this one really is outperforming gold miners, gold itself. And so that one continued today, 1.6%. Also, the sector was upgraded. Gold miner sectors was upgraded by, I believe, a few different analysts out there. I just saw a handful of them. I didn't jot them down. And your weak performers in the S&P 500 are going to be travel, tourism, and of course energy. Focusing on travel and tourism, you've got American Airlines almost hitting new lows, getting down there. 8.5% on the day. Your cruise lines, Carnival Cruise down 9.43%, getting obviously extended there. Royal Caribbean also was lower on the day. New 52-week lows. Pretty nasty sell-off. That's another 9%. You might as well just round up and call it 10%. And then, let's look at Norwegian Cruise Lines. There's your waterfall drop. That's a definition of a falling knife right there. 9.3% lower, and those stick out as the worst performers, some of the worst performers in the S&P. We could go through a whole list of the worst performers, by the way. Let's go to your sector breakdown, take a look here. Tech and travel, worst areas that were hit, or I should say tourism in general. Energy was in the mix as well. Oil fell on the day by about 3.5%. But let's dive into it. Your semiconductors have a lot of exposure to what's going on. Look, China's over there saying, get back to work, right? China, even the president of China's like, go ahead, get back to work, just be safe, go. let's go. Let's fire this thing up. So they're putting the pressure on there. I don't know if maybe it's too soon, but they're putting the pressure over there. In the meantime, it's hurting the semiconductors. We get a lot of our parts and stuff from over there. AMD down 7% back to the 50-day moving average, where it pretty much held, by the way. But that one was one of the standouts in the sector. And NVIDIA coming all the way back to the 20-day. Still very strong overall. Just a rather sharp pullback there in that space. Retail, it was getting going. Retail was just getting back up to these highs. I made the comments a couple times how it hadn't been able to get away from the 200-day moving average, and it looks like it's going to stay that one. Went back to the 200-day. It was trying, man. It's like it was getting there. Healthcare, of course, pulling back. This is the sector, if you want to look at that. That's going to be your insurers that really stand out there overall, as we covered. And then you got home builders also pulling back towards the 50-day. They didn't get a lot of attention today in the whole home builder space. It's people that import parts. China and South Korea, of course, anybody that's importing things from manufacturing plants over there took a hit, like Whirlpool, down 4.3% on the day. What else do we have here? Williams-Sonoma, I believe. Yeah, also lower on the day, a lot of their pots and pans and things. So getting back to the 200-day moving average, lost about 7%. It was a broad sell-off in that space as well, so not like I'm cherry-picking any of them there. And it's now down on the year, by the way, this Williams-Sonoma. All right, let's look at the price of oil. It erases all of the entire month's gains here, which isn't so bad, really. OPEC meeting next week to make their final decision on cuts. A lot of people believe that we've already priced in that they're going to have to cut, especially with this in here. You got the price of gold shooting higher on the day, adds 1.7% on the sort of open session. Did finish a little bit lower in the electronic session through the end of the day. The markets tried to bounce late day, but gave it all back up. So anyways, now it's up 8 days in a row. It's up over 7%, just under 7% now at that pace. You got transports also below the 200-day moving average. This is a choppy sector, right? You could see it looks like a hot mess there on the sector overall, but down 3.5% there. It's your airlines. Delta Airlines stands out 6.2%. We covered American Airlines stands out 8.5% to the downside. Almost every stock in the transportation sector lost 2% or more. So it gives you an idea of how weak it was there. And then I mentioned tech. Here's the XLK down by 4.13%. You had Apple. It was pretty weak on the day, losing 4%, getting out of that range. It's been sitting at highs. So, of course, weak there. Tech, by the way, has nearly erased its entire year performance just in the last couple days. So, remember, this was the best performer, too. So, your best performing area. I said in the notes from Jazz email over this weekend, I used the same analogy again. The guys are fishing, everybody takes a break, but the biggest, strongest, and best fisherman decides he's going to keep fishing. What happens when he stops fishing? All of a sudden, there's no fish, right? The music stops. That's what's happening here in the tech space there. All right, bonds. If you're shopping for a home, you like what's going on here. Sharp spike higher in bonds. Rates moving to record lows. The 10-year, I believe, poked to new record lows there. Can we see it there? 10-year did poke to new record lows. Didn't close there, though. Just incredible, the move to bonds there overall. So that's basically your sector update today. Nothing really good. The utilities and REITs managed to keep themselves down only 1%-ish on the day. Everyone else lost more than 2% on the day. Really, really rough one there for them. Individual stocks, let's take a look. Intuit down 3.7% on the day. They're going to buy Credit Karma. Do you know that? So they're going to buy Credit Karma. Cost them $7 billion. The company was valued at $4 billion just 2 years ago. So kind of interesting there. This will be the largest acquisition for Intuit. They're trying to get into that personal finance space. Everybody wants to be in the personal fintech space, and gobbling up Credit Karma, they thought was a good idea. Should have done it 2 years ago. Could have saved them a few billion, huh? Berkshire Hathaway a little lower on the day, 3.33% on the day. A lot of news out of Berkshire Hathaway with the annual shareholder letter that went out in terms of profit margins decreasing. A little tough there, but overall they still look pretty good, just subject to a bad day overall, I think. Wells Fargo, we mentioned the other day. I think I said $13 billion. I need to correct this. Wells Fargo's paying $3 billion. I think I said 13. If I said 3, it's fine. Either way, it's a lot of billions to be paying the SEC and the Justice Department to make the whole that scandal where they were just opening accounts and employees were just running rogue there. They're going to settle that thing $3 billion. Beyond Meat's a little lower on the day, about 3%. Cargill is going to compete with them with a new plant-based meat. That's just yet another person out there that's going to be competing. So a little bit of pressure there from Beyond Meats. And I thought this was interesting. I know you guys are following this stock, Virgin Galactic. It was down 12% on the day and finished positive by 1.2%. Whoa. Right? I mean, that's impressive there for that stock. 39.8% of the stocks in the S&P 500 are above the 50-day moving average. We were at 59.6. That's quite a haircut in just one day there. You only had 6 new 52-week highs on the day. You had Gilead, Guild, Newmont, of course, in the mix there. And then you had a couple other utilities, if you care. Duke Energy made new highs there. Utilities just, they were down on the day, but they did okay. And then you had Dominion Energy. Up 0.5% on the day as well. 24 new lows, and a lot of them were the weak names that we had already. It wasn't like there were really strong stocks that flew down to new 52-week lows. A lot of them were, Marathon Oil, Ford, Viacom, ExxonMobil, Under Armour, things like that. Those all hit new lows. But you also, of course, had your cruise liners, Royal Caribbean hitting new lows, Norwegian, Carnival Cruise as well, and the airlines moved lower. Probably the most interesting one was First Solar, which really wasn't near lows, but over the last 2 days managed to come down and break through new 52-week lows. I was looking for names like that stood out. Someone that was doing well that somehow retraced all of a sudden because of this. You can imagine why First Solar is sitting at lows there. It did close off the lows, though. So that's what you have there. Caterpillar's Barron's over the weekend said, hey, where the price Caterpillar's trading at right now is priced as if we are headed into a recession. They seem to think it was a good buy here. Caterpillar down 3.6% on the day. Kronos is going to delay the release of their fourth quarter earnings report there. They're having some issues with their financials. Not a good thing. Oh, it's not a good thing, by the way. So that stock lower by 11% on the day. All the other ones were lower as well. We talked about Intuit. I was thinking about doing a video on Kroger here. I was going to try a different series of videos where we just do one stock, right? Sort of like a fun, kind of like Kramer does. Talk about how the company's built up, what they're working on, what initiatives they've got going on, kind of give you an idea what's going on below the surface, talk about pricing, market cap, all that stuff. I don't know if that's interesting, but I was thinking about playing with that. Anyways, I was looking at Kroger as one of the options to do that on. I believe it was Barron's that said, even at these prices, this stock is still cheap relative to its peers. So they were pretty excited about that. And I think that's pretty much it there. I do need to throw out a quick thank you to Chirayu. One of our customers here sent us all this cool money from India. I'm going to show you 2 of my favorite here. He sent us a bunch of different denominations of Indian rupees. I like this one here, 100 rupees. If you've never seen one, that is a cool looking bill. So we're going to put that up on our wall. And then 200 rupees. This orange color, man, that just goes with the theme so much. I love that dirty kind of, what's kind of a bright orange there, but really, really cool. Thank you, Chirayu, for sending that to us. That's going to go on the wall of dough that is quickly building up. If you have foreign currencies or currencies of any kind, just low denominations, don't send me money. Or if you want to sign something and we're going to put it on a wall, got to build out an entire wall. We've got a ton of money that we're working on putting up there. So thank you for doing that. All right, let's do this here, and then I'll take your questions. Tomorrow, you've got earnings. Unfortunately, it's not from anybody that's going to move the market, right? So we'll see what happens. Oh, I'll go over some stats for you in a second, too. American Tower reporting earnings in the morning. BMO reporting as well. Home Depot, Macy's also. Salesforce.com will report after the close. Caesars is going to report after the close as well. Jazz Pharmaceuticals, little boogers stole my name. It's Jazz, ticker symbol Jazz. Anyways, and Toll Brother reporting as well. Here's the thing. We had a 2% gap down in the market. Is that good news or bad news? Went back and looked at it. If you take a look, the day after a Monday decline of a 2% gap or more, which we had today, we call Turnaround Tuesday. So we've talked about that before. Last time Turnaround Tuesday worked out perfectly. The average gain is 1.02% on any day, on any Monday where the stock market gaps lower by 2% or more, which we had today, so we'll see. The average performance after a 2% gap down day, I'll share different data points with you in case you're a short-term, long-term investor, whatever it is. 5-day performance averages 1.64%. 62% of the time it's positive. 1 month later, we average about 1%. 63% of the time it's positive. 6 months later, 7.5% is the average gain from that gap down. At 74% of the time it's positive, and 1 year later, after a 2% gap down or more, we have an average of a 15.2% gain, and 81% of the time the results were positive. So rather interesting there. It would suggest that people gobble up dips when they get them, when they're fairly sizable like that, and most people do not fear those types of move. How do you feel? How do you feel about that? You guys out there shopping? I know for the most part, you guys wanted the markets to fall. Here we are. We're working on it. So what do you think? I love it. I didn't like, by the way, that the markets finished near lows. Don't want to see that. Whenever the markets gap down by 2% or more, if you look at every intraday, right, the bounce off lows tends to come after 2 o'clock. It was perfect today. After 2 o'clock, we got our bounce. Everything started good. However, right before the end of the day, the markets gave all of it back. That's not a good sign, I think, going into tomorrow. So maybe we gap down to start the day and start a little bit of a rally there. I'm not sure, but you don't like to see that. You want to see that people start to shake off the news. They've got all day to digest it, and then they come in and at least do a little bit of shopping. That was not the case today. Very orderly drop. It wasn't like there was panic throughout the day and then it calmed down. It was just very orderly for the most part, I thought. Yeah. So Harry, that kind of answers your question. Yeah. Tandra, you got your drop. I love it. I know Tandra's been cheering this thing lower for a while. Your patience has paid off. Good job. Good job. You still expect a little bit of a... Yeah, I would think the same thing. Based on the stats, not really my opinion, but based on the stats, you'd expect to see at least a bounce over the next couple days as people try to say, well, I'm not maybe going to go all in, but I'm going to put a little money to work here. I know a lot of you have cash on the sidelines. I talked to a lot of customers today that have been saving cash, and they wanted to put a little bit to work, but not all of it. I totally understand that. Yep. Totally understand that. Oh, you discount buyers going after Carnival Cruise. I love it. You want more blood. You guys are great, man. I love it. You guys are great. Smile Direct Club, they got some issues there. You saw the news last week, which obviously pulled the stock down to where it was. This is an important earnings announcement for them. We don't have a lot of data to go on, so I can't really say one thing versus the other there. But this is important for them. I like what they're trying to do to get outside of that mail order mouthpiece thing, getting into Walmart, getting into other dentist areas and things. I like that. I don't know that they made any progress there. I think tomorrow's earnings announcement, if there has been progress there, is going to be very helpful because they've got some controversy to shake off there. We'll see. Oh, and if you bought it at $7.80, goodbye. Good job. Wow. I love it. What you saw today, we had a record amount of volume. What does that imply, and how's that affecting the market? Volume meaning the shares trading hands. So, for example, I can show it. It's not maybe the most elegant way to do it, but if you look in the background of any chart that I show, those gray lines, they are, that's the volume for the day. Number of shares or contracts that traded hands throughout the day. If you look at today, that's a record. There's no other point that you can go back and find a day as high. So what you would say is that was a sell-off on higher volume. It wasn't sort of a fluke, quick dip. There wasn't one big seller. This was the masses deciding to sell all at the same time. I think it's too early to call margin calls and things like that, but we'll see. Are your Google revenues up? Seem like more ads. You're wondering if Google is getting it all. You think they're getting it all. In all honesty, we make between $12 and $20 per day on this. I'm not kidding. It's anywhere from 12 to 20. Like a day like today, you got more people watching. Probably more people watch because of the markets. Probably $20. So we don't do it for the money, just in case you were ever wondering. I think I'm allowed to share that with you. Yeah, so we covered that. Yeah, the days with big drops like that and the recoveries from that. I didn't have a chart to share. I just kind of spit out the data. As you can imagine, I was pretty excited today. Had a lot. I was running around pretty excited. That was pretty cool. Other than that, I think we've got it. Expect more excitement going into the the next few days of the week here, of course. We'll be covering it all for you. I hope you guys are out there paying attention, doing a little shopping, and getting excited about it. And again, I know we're a small company and everything, and those of you who've given us a shot, I really appreciate it. I just love the mindset. I love that the efforts that I've put in to teach about all this. I spend time going over what happens when the markets fall. All the geeky data stuff in our classes, I do that while the markets are going up. I wouldn't dare touch that information now. I do it while the markets are going up so nobody's emotional, because somebody out there is emotional. They're going to need a towel. But just that laying that groundwork of what the markets do statistically and what you're up against and how your investments are going to perform. Gosh, I love that response. I talked to some of my advisor friends today, and they're like, buddy, I got to go. I've got so much going on. And I'm like, oh, you're not playing golf today? You actually have to, oh, man, that sucks. Because customers are calling, freaking out. They don't know the information. They don't know what to expect. Are we going lower? Are we going higher? What's going to happen? What happens if we go lower? What's the results? I love it, man. I love that part of it. I will not be stopping that. So I appreciate you guys watching. I appreciate every one of you guys that have joined us here at Jazz. And I'll wish you a great rest of your day. Remember, if you're watching financial media later, you're going to see boo. Like, scary. It's nasty. Now you know the stats there. We'll see what happens. We'll cover it, of course, tomorrow. Enjoy the rest of your evening, and see you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.